Is Alphabet Google just too cheap to ignore right now? As you can see, the company has a market cap of $1.96 trillion and a forward PE of just under 20 times. Now, if you look at its performance year to date, it's up 14.33%, so not really that better than the S&P, for example. The last 5 years, yes, it's up close to 160%. But is it normal? The last 3 months, stock is down close to 10%, was down closer to 15% just a couple of days ago. It's still Alphabet. It's still Google. We've talked about it. Yes, there are some fears about Google being broken up into different companies. I did a special video about that. To be honest, even if that happens, current Google shareholders or Alphabet shareholders are not really going to get hurt by it. Because I do think, that's just my opinion of course, I do think that the sum of all parts is worth more than what it is worth today, which is $1.96 trillion. That said, of course, search, their basically cash cow, is under pressure as well, not just from a regulatory standpoint, right, antitrust stuff, but also from the rise of, well, chatbots, ChatGPT, Perplexity, Gemini, so maybe cannibalizing Google search, all of those things. But as we've seen before, since the announcement of ChatGPT, Google has not really lost market share. So yeah, we have to take that into consideration as well, right? Now, with regards to Google Alphabet, I want to compare it to another tech giant, which is Microsoft. So if we look at Microsoft and Google Alphabet, we can see the following things. Forward PE, Microsoft is trading at 33 times. Google, just under 20 times. Price earnings to growth, so we look at what's expected forward. Price earnings to growth for Microsoft, 2.48. Google, 1.2. Price to free cash flow, that's in the last 12 months. Microsoft, 43.7 times. Google, 32.4 times. Price to sales in the next 12 months. Microsoft, 11.6 times. Google, 5.4 times. So, yeah, I mean, I did a poll on X. Of course, it's nothing scientific. But yeah, I asked, for the next 10 years, what will you pick? Alphabet or Microsoft? Also, by the way, do let me know down in the comment section below. If you had to choose one or the two for the next 10 years, you have to choose one, Microsoft or Alphabet. Which one are you buying today? Let me know down in the comment section below. Like, subscribe, hit all the buttons, do all of that. And if you want to support me even further, do check out all the links and the offers down in the comment section below. Or you can also go to fool.com/couchinvestor to get the top 10 best stocks to buy now. I would really appreciate that. Now, let's continue with my case here. Of course, I am biased because I do hold Alphabet in my portfolio. All right, so first up, we've got this Reuters article saying EU officials unlikely to issue breakup order to Google for now. EU antitrust officials are likely to order Google to stop its anti-competitive practices in its ad tech business, but will not issue a breakup order as they had originally warned. A breakup order could come at a later stage if Google continues its anti-competitive practices. Again, we've talked about that. Why out of all of the years that you could make a case against Google, you come at a time where we've seen plenty of articles say that Google search is under pressure, but now you want to go against them? Okay, again, good luck. Moving on to Google Cloud. So we've got some comments about the Google Cloud business. So we now offer close to 1 gigawatt of water cooling in production. That's 70 times the number 2. So they're talking here about their solution and their competitors. Here, 1 gigawatt of water cooling in production. That's 70 times the number 2. We've seen a huge growth as a result in our AI infrastructure. 150 times more compute instances can be connected to a single storage volume, which means you get super dense training clusters. We've also seen 10 times growth year over year in people using our systems for training. Here are examples of customers. 90% of AI unicorns run on our cloud for training and inference. 60% of all AI-funded startups ever use our infrastructure for training or inference. We're also seeing traditional companies now building both high-performance and generative AI models on our cloud. An example is Ford Motor Company. They're using our deep learning technology to build simulations for wind tunnel and for virtual wind tunnel simulation, replacing a traditional approach was called computational fluid dynamics. When it comes to the monetization part, he says the cloud CEO says, we monetize our security, which is powered by AI capabilities. We monetize based on the value we are creating for users. We are capturing customers faster doing larger deals, and customers have increased their adoption of our products by 30%. We have been patient with AI, and because of that, we have found many ways to monetize artificial intelligence. There was also during the All-In Summit, Sergey came in and talked about the fact that Google might have been a bit too shy in the past to ship things to the public because they were afraid of, afraid of what actually happened, even when they were afraid to ship it early. So hopefully things are changing at Google, especially culture-wise. Remains to be seen, but definitely these numbers right here, these comments with regards to the cloud business are definitely reassuring. And to be honest, with regards to the cloud, I think even if the search business does get hit a little bit, I think the cloud is growing so fast and will become more and more profitable that it might balance itself out. But more on that in just a second. Let's first talk about the Google subscription platforms and devices and YouTube ads revenue. Now, YouTube ads revenue since Q3 2020 grew at a CAGR of 19%. Reaching close to $39 billion in revenue in the last 12 months. As for the subscription part, also in the last 12 months, that has reached $37.1 billion. And since that Q3 2020 quarter, it grew at a compound annual growth rate of 17.5%. Moving to Google Search, so of course the largest segments here, revenue in the last 12 months, $186.7 billion, also growing well, basically close to doubled since Q3 2020. And then we have the cloud. So the cloud since Q3 2020 grew at a CAGR of 36%. But of course, previously operating income was a loss. Only in the last couple of quarters did it become operating income positive and growing quite quickly. So yeah, it is the segment we can compare here to Microsoft and AWS. It is the one that is growing the fastest right now. And of course, we've seen how profitable it is for the other players. And I think we're going to see the same thing for Google. So yeah, this is definitely not a segment you want to be sleeping on because it is growing extremely fast. And it's not like we're dealing with small numbers here, right? The revenue for the last 12 months is already at $37.5 billion. And so right now, if we take the couple of segments, we put a value on it. So YouTube subscription platform, I put a $700 billion value on that because I put a 10x price to sales multiple. Google Cloud, same thing, 10x sales multiple. It's a bit of the same with the other companies. So you reach $375 billion. The search part, I put a $465 billion value on it. Why is that? 10 times PE with a 25% net margin. Now, of course, I want to be as, let's say, conservative as possible because you do want a margin of safety, let's call it. Then I put $50 billion on Waymo, Pixel, and some other bets. Of course, that number can be much, much bigger, but with Waymo, we don't know. It can be $100 billion. I don't know. The last numbers were closer to $30-40 billion, I think. So I put 50 here. You can easily double that number, do whatever you want with all the other numbers. Then cash, $90 billion. So you reach $1.68 trillion, which is of course less than what the company is worth today, closer to $1.95 trillion. Despite all of that, I'm still quite comfortable buying in the $150 range for Google, despite what you're seeing here on the screen, because this gives me some room to play with. I think Google Cloud, maybe you can put a 15 times multiple, could very well be. YouTube subscription platform, 12, 13 maybe. So the numbers can of course change, buybacks, dividends, etc., etc. You take all of that into consideration. I think it's still quite good, around $150 or so. The future is quite bright for the whole company. Again, the future bets, the Waymo part, the Pixel, DeepMind, all of that, I mean, that could be definitely 10 times bigger than the $50 billion that I've put here on the screen. Of course, if it works out, if it becomes profitable etc., etc. But do play around with this yourself. Let me know down in the comment section below if I'm completely delusional or not. Let me know. By the way, did you know that this existed? Capital G is Alphabet's independent growth fund. So they have $7 billion in assets under management, resources to help you grow with typical investments of $50 to $200 billion per company. They've had 16 IPOs and 9 M&As exit. I mean, companies like, I believe, CrowdStrike, Stripe, Airbnb, Robinhood, etc., etc. So some pretty big success stories there. I didn't know this existed, but okay, very good from their part. Of course, there's also the Google graveyard, right? The hundreds and hundreds of apps, programs, products that they launched and they basically killed off a year or 2 or 3 after they were announced. There is actually a website, Google's graveyard. You can check it out and you can see all the list of Google projects that basically essentially were killed or failed. But that's also basically what you get when you look at Alphabet, when you look at Google. It's basically a company that generates just so much cash and they are allowed to try out multiple stuff. Yeah, it's a huge company with a lot of startups in it. If one works out, great. If it doesn't, it doesn't. They move on and they keep on generating billions and billions of cash each and every quarter, each and every year. The beauty of a well-run business. And so moving on here, finishing off, right now we are above the 200 and the 20-day moving average. Last week we were actually under the 200-day moving average, so it's nice to see the stock rebound. Of course, on Wednesday, Fed meeting, stocks can go up, stocks can go down. If you want to play it safe, you can buy the VIX and enjoy whatever happens. But yeah, right now closer to $160, which is just above the 20-day moving average. The 50-day one sits at $163 and the 200-day one at $157. RSI is pretty neutral. So like I said, this is the range where I don't really mind adding to my position. Yes, I've shown you the numbers where, okay, maybe yes, in the last 2 weeks, closer to 150, maybe even under that. Could have been better, probably would have been better, but okay, we're not here to time the market or to time any specific stock. I think for the long run, you cannot go wrong with companies like Google, especially not at these prices. So that's about it for me in this video. Of course, do share your thoughts down in the comment section below, like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.